Are you guys looking to double or triple your money in a short amount of time, maybe even less than a year? Well, stick around for this video and we'll get into some ways to do that and a lot more. Good morning. My name is Adam Kahn and I'm the Rational Investor. Today is Wednesday, November 22nd, the day before Thanksgiving. Happy Thanksgiving, everybody. Hopefully, I'll have time to do a video tomorrow as well, but we're actually here in California visiting family. I love it out here. The weather's a little bit chillier, but it's kind of a cool area. We're up in Northern California, and here, let me take around a bit in the yard because they got chickens and all sorts of stuff. It's pretty fun. My son loves coming out. He can pick vegetables and fruit and stuff. Plays with the chicken. I've never seen anything like it. Hold on, I'm gonna hit pause because next. It's pretty wild. After like an hour or so, the chickens trust him so much they let him pick them up. They let him play with them in a way that I've never. I didn't know chickens will play with people, but it's kind of funny. So anyway, I want to get into the video about how to double or triple your money in a short amount of time. I'm going to give you a couple of stocks that I think can. But before I forget, before I get into any of that, if you haven't already, do me a favor and hit the subscribe button, slam the like button if you don't mind. I really appreciate the support, and it actually helps YouTube's algorithm, and it helps grow the channel and other people find it. So if you enjoy the content, I really appreciate that help. I'm also going to put a couple links in the description about opening an account at SoFi if you like. If you do that, if you deposit more than $10 or so, they're going to give you a free $25 on top of it. And even just by clicking the links, I think when I've done it, it shows ways to get as much as like $275. I haven't followed through to see exactly what you need to do to get it, but I like SoFi. I use them myself as well. I own some of the stock. So I actually think it's a decent company and not a bad platform to use. So that's cool. And it also gets me a gift that is an account with my son, who I mentioned. He's 13 years old. And it allows me to help teach him about this stuff because he kind of gets excited about investing and everything else. And when we do that in the account, then yeah, that encourages him. And I really like teaching him about this as well. So let's talk about how to double or triple your money. In terms of doubling or tripling your money, the first thing I have to say is don't follow the advice. It's just been pushed on me as things that'll help get views and everything else. But the basics are the basics, and the more risk you take is the more risk you take. There are ways to try to double or triple your money, but they're also going to run your money at risk of losing it as well. I'll give you a couple of stocks that I think are decent picks and could double this year, but to be perfectly fair, I would hate to see people put a majority of their income or their finances in it, taking a shot like that. I mean, it is a shot. I think you're better than going to Vegas and putting it on blackjack or something. But when you put too much money into things trying to double it, it's generally a mistake and it generally goes the wrong way, especially if that's money that you care about. Now, you want to take a small percentage and put it in something risky because you hope that it really pays off. Great. That's fine. But for the most part, trying to double, triple, quadruple your money in a short amount of time, especially if there are YouTubers out there talking about how you can do it, be really cautious with that stuff because the more risk you take is the more risk you take and the more liable you are to lose your money. That being said, one of the companies I really like that could double or triple this year is a company called VinFast. Its ticker symbol is VFS, and I'm really surprised CNBC hasn't talked about it all. It's an electric vehicle company out of Vietnam. I think with what's been going on with China and a little bit, they're getting a little bit of extra push in the US for political reasons and whatever else. Well, the stock opened up or went public at like $10 or $12 a share. It shot up, I think, to 100 or 90 or whatever it was, and then plummeted down to $5 or $4 a share. I don't know the real value of the company. It could be zero, but it was trading around six today. It's been hovering in the fives and sixes. In terms of taking a shot, I don't think it's such a bad shot. When I took a look at their cars, and we went to Asia this summer, and VinFast was one of the companies that was around. They do different part of the company also does investing in properties and investing in this and doing. They're a huge company. Well, when I went to the website and looked at the cars look pretty cool. So I don't know how well they'll do, but I think the ability of selling direct to consumer, which I've mentioned a few times, is a real advantage from a lot of these new car companies. I'm kind of interested to see how it plays out for the Fords and GMs of the world with the dealerships. That I think that's a large percentage of the profits that go to a middleman that then goes to sell to the public. I'm guessing that VinFast works the same way like Tesla does, and probably Rivian and probably Lucid and the others. I like Rivian too. That's not the one I'm talking about in this video, but I think that that ability gives them more profits, more room to work on price if they have to when things slow down, better to get better margins as things go up. And I think that that gives them good opportunity to grow as a company. And I think it's reasonable that the stock could go back to the IPO price of, $11, or I think that's where it was, from 5 or 6, which means doubling your money. I also think it's reasonable that it could pop up to 20 and be something that surprises people. And you might triple or quadruple it. I wouldn't put much in it. I just wouldn't put a big percentage of my portfolio and risk it like that. Because for all I know, they're over leveraged and the company fails and doesn't, and you lose all your money. That's why I say I just wouldn't put all my money in things that somebody talks about could double or triple, because you're risking that money. And again, you guys need to do your own research. I know I've said it before, when making financial decisions, or if you have a lot of money, reach to a financial advisor, not Miss Mary or some wacky one that people make in the comments, which comments are comments, so whatever, but be real cautious of any of that stuff. But VinFast is one of the ones I really like in terms of doubling your money. The other one I'm going to talk about is Endphase. Well, Endphase fell from $340 a share to under 80. You know, and it's already back at 100 today. I think there's good opportunity that realistically Enphase could be at 200 by next year, and maybe it goes back up to the highs. I don't really know what's caused the collapse or the drop in the stock price outside of solar's been out of favor. Well, maybe it goes back in favor. There's really no way to determine why stocks will move like that. Meta did the same thing. It fell from 340 to like $80 a share last year. This year it's back up to 340 already. Maybe nothing really changed. And when I look at the price at 340 for Meta, still seems reasonably priced in terms of what they make in a PE. Well, I don't know as much about Enphase. What I can tell you is I put solar in my house, and the guys who sell it, they were all talking about how it's the best components. One in particular who only sells Enphase, it was a little more expensive than the other companies, but he was saying how it's so much better, and he went on and on. He was maybe $2,000-3,000 more. So I went to the guy who wasn't selling the Enphase product and asked, and he said the same thing, that it really is a better product. But the price difference was like $10,000. The main conversation went to like how long I was going to stay in the home. It sounds like those components last, 40, 50, 60 years. Well, that wasn't a concern of mine. I don't know how long we're going to be in the home. So even at the $2,000 or $3,000 difference, I didn't know that there was value in spending the extra money, because both of them also admit that the other components were just fine. So I, I know nothing about it. I don't know why they like the one over the other, but I do know that 3 people, because there was a third that told me the same thing. The only one who didn't was Tesla, but Tesla does their own thing, and you know, I would do your own research. I didn't go with Tesla. Enough said about them. But both of the others and that third guy all gave me the same information, thinking that Enphase was the best. So when I saw that the stock fell from 340 down to under $80 a share, I picked some up and I added on today. I hope that it continues up and goes back to 300 a share. And then what I did, again, you guys need to make your own decisions and trade things, or reach out to your financial advisors and make your own financial decisions, not listen to me, is I actually sold. I'd have to double check. I'm doing the video now, but the June 200 call against one of the 100 shares that I had, I think I got $1.75. It's higher now because the stock's higher than where I sold it. Maybe you get about $2 for that. I don't really plan on getting out of the shares anytime soon. And geez, if I get $200 a share for the stock come June, whatever. They can take my shares and give me my extra $2, and I'll figure something else I want to do with the funds. So Endphase is another one I think could double. Um, but I still think you're better off diversifying a little. As I've talked in other ones, I don't buy 50 or 100 different things and spread out too thin. But at the same time, I do try to pick up only 20, maybe 30 stocks total to spread out through, and not. And I tend to stay away from ETFs and not be too spread out, because then I feel like I don't have the potential to really grow at the rate I'd like to. If you just want the return of the markets, great, get some ETFs, just make sure they're not overlapping each other and things like that. But I hope to outpace it, so I try to pick my own stocks. Maybe it's just an ego, maybe it won't work. I've tend to have luck in the past, and I hope to have luck in the future the same way. My thought is, if I pick what I think are the best companies, not worry about too much else, that hopefully those best companies outperform. And that seems to be the case time and time again. If you watch CNBC or any of them, what's on there? Well, Meta, Amazon, Google, Tesla, Microsoft, um, Amazon. These companies tend to continue to perform, and I hope they do into the future. And I don't want to put all of my money in VinFast or Enphase. I don't mind making a small bet on them and hoping to do well, but I don't want to put a huge portion of my portfolio into it, hoping to double my money and risking it at the same time. So I hope you enjoyed the content. Again, I love the idea of doubling my money too, but I'd rather spread out and try to make 10, 12% per year. I'd be thrilled with that. Last time before I end the video, thumbs up, subscribe, chime in, make the comments. I love seeing people talk. I think it's so cool. I want to thank you guys. I can't tell you how excited I am to see the channel growing. I'm up to, I think, 1,700 subscribers. I know there are plenty of people who have millions and whatever else, but that's so cool. Like, really, I'm very excited to see that happening. So, if I don't talk to you tomorrow, have a Thanksgiving. If I do, I'll see you tomorrow, and have a great Wednesday.